Hi, welcome back to Sobodo FX community. If you are a beginner and you have less than $50 in your trading account or $100, listen, at the end of this video, you are going to learn how to buy and sell the market without price coming back to your entry position. For example, this is a $50 account. As you can see, the first trade which I took, it went straight away into my predicted direction without the market coming back to my entry point, as you can see. Hence, with your $10, $20, $50, you don't want to enter the market where you shouldn't be. At the end of the day, you blow that account. That's why entry really matters when you are trading with smaller accounts. So in today's video, I'm going to show you exactly how you can do this without blowing your account. Please take note where necessary. Comment if you have any doubt or questions. Without much ado, let's dive into the video. Alright, now follow me closely. Step 1. Always make sure you are on an hourly time frame. Step 2. Look for obvious wicks in the market. Basically, wicks are the highest and lowest price point in the market, where price may try to reach again to retest. Hence, these are the points we are going to establish our support and resistance level. When you see the market displaying like this, which means there are big boys behind this market, like the central banks, hedge funds, institutional traders, etc. These guys have got deep pockets, and whenever they enter into the market, this is their footprint. You and I with our $50, $100, there's no way you can even move the market up to 1 pip. Hence, whenever this displacement happen in the market, a wick formation is always going to take place. And these are the areas we, as a retailer traders, we should be always aiming to target. Okay, we have our wick here, wicks. We have our wick, as you can see that level. We have this level, we have our wick. We have our wick at this level. We have also our wick at this level wicks. What next? We have our wick at this level. If you also notice, this is another wick. Okay, so basically what we are doing here, we are at the extremity of the market, the highest price point and the lowest price point. And once we establish this type of support and resistance, you always going to use the 5 minutes for your entry. After you've established them, then you zoom in to the 5 minute time frame for your entries. Now, how do you do it? How do you look for entry? Let me show you. But first, I believe there are people who will be having difficulties to really establish these levels. So I came up with an idea by using an indicator which will help you identify this extreme point of the market, the wicks, the highest and the lowest price point. So just go on your indicator tab. Upon clicking it, search for support and resistance. You see support and resistance level with breaks. You see this one, you click on it. Upon clicking on it, you see automatically, you see it will what? Identify these levels, this highest and lowest price point in the market for you. Let's do some modification to this indicator. Go to setting, style, deactivate all the breaks, deactivate all the breaks. And now that we have an indicator which is going to help you plot or mark the highest and lowest price point in the market, let's say we have this point which was created here. We have wick, wick, wick. So we draw a line connecting the three, you see. So here we have our wicks at this level. We've drawn our resistance line. Okay. Here also, let's say we have our wick at this level as well. Here Once you establish maximum of 4, you see 1, 2, 3, 4. So now you go back and deactivate it. Good. So now that we have this deep pocket support and resistance levels, what I'm always gonna do, I'll wait for the retest. If there's no retest, trust me, I'll just chill, no trade. Let's say for example at this level, we wait for the retest in 5 minutes. We'll have to see whether the price will break our support and resistance level, and if it breaks, then the next thing we're gonna wait for the retest. No retest, no entry. If you notice right from here, price broke to the upside. When price break, don't do anything, wait for the retest. Upon price coming back to retest, that's the entry point. That's the perfect entry point. Just a quick reminder, if you find this video useful, if this video is of any help to you, please like and subscribe. By so doing, it will help grow the community. Subscribe now. What are you waiting for? Just subscribe. You should always aim to enter, and once you enter, trust me, the moment the market take off, it's not coming back to your entry position. I guarantee you. And take a look at this. Price then spiked to the upside. So here again, what happened? When price came, if you notice, it broke to the downside. Upon coming to retest, that's where, with no hesitation, with no doubt in mind, that's where I'm going to enter, risking nothing more than 20 pips. And what happened? At this price point, let's see. As price nears our resistance level, remember this is our resistance level, we want to see if the market can break and come back for the retest in 5 minutes. Let's go to our area and see whether if there was any retest. What I'm sharing with you, if you just use it accurately, guys, you will be always profitable. You will easily flip your small account, guys, with this analysis I'm showing you. What happened here? If you notice, price broke to the upside. Upon coming back to retest, it then spike up. Hence, that is a perfect entry point right there. Let's say you are risking 20 pips. You see how the market then move to the next level. Also, the next level also broke to the upside. As you can see here, price broke to the upside. Upon coming back to retest, right there is another perfect entry opportunity. Just clone this guy. And right from there, you see, price then move to the upside. You see. Let's say, for example, this level here. Okay. And also, let's mark this level here. Here. Remember, this is a wick, but the indicator failed to highlight it. But your eyes will never fail, you see. So this is also another wick. Also, this is another wick at this level. Okay. So now that you have 1, 2, 3, so what you will do, in order for you not to get confused, deactivate. So now you only have 1, 2, 3. Now that you have these levels, for example, let's highlight this level. When price came to this level, this is the time now. You are now going to zoom in to the 5-minute time frame to wait for a break and retest of that level. So on the 5-minute time frame, we want to see whether if price come, it will break, retest, and continue like this. Or if it break to the upside, it will retest and continue moving like this. So here, if you notice what happened, price broke to the downside, it came retested, you see it dropped. Later, what happened? It broke also to the upside. It came, retested. Let's say if I'm risking 20 pips, trust me, to be rest assured, it is never coming back to my entry position. So this is how I always enter the trade, without price coming back to my entry position. Let's go back to the hourly time frame. Let's see this other week. As you can see here, this week, okay, let's highlight this level. Let's zoom into the 5-minute time frame now and wait for our retest. Remember, always wait for your retest. No retest, no entry. Look at this level. Our support point. Price broke to the downside. Upon price coming back to retest, I'm not hesitating. Right at that point, I know what I'm willing to risk, which is like 20 pips. If I'm willing to risk 20 pips, let's say price came right from there, you enter, you see. Don't worry, your stop loss will never get hit if you do what I'm teaching you correctly. For the second time, when it came, you see right from that level, it drops 122 pips to the downside, you see. To the upside, when price broke, you see, price broke to the upside. Upon coming to retest our level, market then shot up. Right from here, this is another entry point. Let's say you are risking 20 pips. Right from there, what happened? The market then spiked to the upside. For me, normally what I do in terms of TP, like if the market, I'm expecting a retracement from this level, which means the next level of support and resistance I drew will be my target by risking just 20 pips. Let's go to another pair like AUD USD. So this is AUD USD. The same thing again on the hourly time frame. Identify your highest price point in the market, which are the wicks, by using your what? Indicator, support and resistance. Okay, let's say for example, I have 0.1 here. I want to draw at least maximum of 4. 0.2 at this level, here also at this level. So now what I will do next, I will deactivate this guy. Let's say for example, right at this level, let's go to the 5-minute time frame. On the 5-minute time frame, upon price, you see, when price came, it broke to the downside. It came for the retest, but didn't reach, you see. So here, no trade. The next, what happened? It broke to the upside. You see, this is the retest. Right here is your entry point by risking nothing more than 20 pips. So imagine if you are risking 20 pips, you see. You see. So this is even a lot. You see. This is even a lot. And what happened? Price will never take you out. As long as you do it correctly, and you see this displacement happening, guys, this is the big pocket support and resistance, guys. Whenever this big elephant comes into the market, guys, their footprint will always be there. Because remember, 99.99% of all retailer traders lose their money in 90 days. Within 90 days, by just using the same thing. Right here, let's go on the 5-minute time frame and see if we have our break and retest. Here, if you notice, price broke to the upside. Upon coming back to retest, you see right there is your entry point. It's like even 8 pips to the downside. What happened? You see how the market then flies to the moon. And later what happened? It came again, broke to the downside. When it broke to the downside, we're expecting what? The retracement. And it came for the retracement right there. And what happened? The market then collapsed to the downside. For the second time again, it came. If I clone this guy, right there. Imagine you are risking 20 pips. This is just like 13 pips. And the market then spiked to the downside. So in summary, always make sure your chart is on an hourly time frame. Next, identify your highest and lowest price point, the wicks. Whenever the big boys comes into the market, when they display the market, these wicks are always formed. These are your targeting point in order for you to establish your support and resistance. If you cannot use your normal eyes to establish this support and resistance, then what you will do, go under indicator tab, activate your support and resistance. It will help you to what? Plot these levels in the market. All you need now to do, mark at least 4 of them. Don't draw too many. When you draw too many, there's high chance that you're gonna mess it up. So just draw 3 to 4 maximum, and you wait for the retest in 5 minutes, like this one here. After that, you wait for the retest in 5 minutes. And make sure after you've drawn these levels, make sure you deactivate it so that you will know exactly what you are doing. So this is all I have for you guys. Make sure you follow what I told you. Trust me, you will always be in profit. And if you find this video useful, or if this video is of any help to you, make sure you click that like button and subscribe so that whenever I upload new content, you will be the first to get notified. Bye for now.